Bloomberg Audio Studios. Podcasts, radio, news.
This is the closing bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Scarlet Fu.
We do have some earnings. It's still earnings season after all, and this is not from the retail sector. It's from the software sector. This is Intuit, which of course does own tax preparation software companies. Intuit reporting fourth quarter adjusted EPS of $2.75, beating the consensus estimate of $2.66. Net revenue was also higher than anticipated, $3.83 billion. When it comes to the outlook, Intuit sees revenue for this full year, 2026 revenue, I should say, $21 billion to $21.19 billion. Analysts were looking for $21.08 billion. Adjusted operating income anywhere from $8.61 billion to $8.69 billion. Analysts were looking for $8.67 billion, and you could see the stock moving lower in after-hours trading as its adjusted EPS also comes in at $22.98 to $23.18. Analysts were looking for $22.99. So it does appear that adjusted operating income and perhaps that revenue is the number that is concerning some investors.
All right, you see the shares there unchanged. Meanwhile, more activity right now in Ross stores. That company just now reporting earnings. The comp sales in the most recent quarter did come in at about 2%. Now, that's relatively in line with what the street was looking for, though we should point out that growth rate is about half of what it was from the year ago period. Now, on the EPS side, it came in at $1.56. The street was looking for $1.53. So that is also a beat as well. And merchandise inventories, though, did rise to about 4.7%, relatively in line with estimates. Here's the forecast. The company says that for the full year, it sees EPS in the range of $6.08 a share to $6.21 a share. The top end of that range is below the average of analyst estimates. Analysts are looking for about $6.24. That might be why you're seeing the knee-jerk reaction with the shares moving to the downside.
Okay, Ross down 3% in the after hours, up 3%. Workday, the HR cloud management software firm. The company out with some news in addition to numbers. Second quarter adjusted earnings per share coming in above estimates. Second quarter revenue coming in ever so slightly above estimates. We'll go ahead and say that actually just matches estimates. The news here, though, is that the company says it signed a definitive agreement to acquire Paradox, which it calls the AI company redefining the frontline candidate experience. I'm reading from the statement right here.
What does that mean in English?
It's a definitive agreement to acquire Paradox. It's an agent that uses conversational AI to simplify every step of the job application journey, particularly for high-volume frontline industries, which employ nearly 3 billion workers globally. Workday says the addition of Paradox will give it an AI-powered talent acquisition suite to help customers more efficiently find, hire, and onboard every type of worker. So I guess the idea is that it makes the onboarding experience easier for those folks who use Workday software, but I'm going to have to dig into this acquisition a little more later.
That sounds about right, and makes it more efficient for the company as well after they spend the money to buy this company. All right, let's just take a look at what happened in trading when it comes to the sector performances, because a down day overall here, unlike previous days where there were more advancing sectors than declining sectors, even as the S&P 500 declined, this was an overwhelmingly negative day here among the sectors. Only energy and materials, and these are some of the smaller sectors, as you can see by the thin slices of the pie, gained. Everything else declined, led by consumer staples, and that, of course, was being dragged down by Walmart.
Okay, well, let's go to some of the gainers. Tough to find them, but the best performer in the S&P 500, up more than 14.5%, was Paramount Skydance. Remember the new ticker, PSKY? Higher all day, even after some news that two House Democrats, Jamie Raskin and Frank Pallone, will examine whether Paramount Global and Skydance Media accepted, quote, illegitimate demands from President Trump to secure approval of their merger last month. Paramount Skydance did not immediately respond to requests for comment. The White House and the FCC also did not immediately respond to requests for comments. Select Quote surged today. This was among the most actively traded stocks, up more than 41%. It's the insurance company. This jumping the most intraday since February after the company reported positive adjusted EBITDA in the first quarter. Wall Street expected a loss. Those numbers coming ahead of the bell. And the most actively traded stock in the entire index or in the entire market today, by far, Open Door Technologies.
Oh.
Yeah, surging again, another 11% higher today. I know.
Did they report earnings or something?
No, nothing happened. Except we are speaking with Eric Jackson of EMJ Capital a little later in our program. He's the, it's a small hedge fund that he has. He's the only employee, and he's been all over social media with this company, and he's been able to, I think it's fair to say, get the conversation started with retail investors about where he thinks this company's going, and they've been responsive.
Sweet.
Let me just jump in here because Zoom just reported results. Zoom's second quarter adjusted EPS of $1.53 does top the consensus estimate of $1.38. Second quarter revenue, $1.22 billion, a slight beat on the expected $1.2 billion. In terms of the outlook, it sees full year revenue of anywhere from $4.83 to $4.84 billion. Previously, it saw $4.8 to $4.81 billion, so that is an upgrade in its outlook for the full year. In terms of the full year operating income, $1.91 billion to $1.92 billion, also an upgrade from what it had previously anticipated. Full year free cash flow will be at least $1.74 billion, whereas previously it saw at most $1.72 billion. That stock moving higher in the after hours trade by 4.4%.
Well, let's look at some of the stocks that are in the red today. Of course, we know the market was lower at the close here, but let's take a look at Walmart shares. This is the second biggest decliner in the S&P 500, and this is after the retailer reported a profit that missed expectations for the first time in 3 years. This did overshadow the higher sales that it did report, and of course, we know we've gotten so much from a lot of these consumer-oriented companies, and it does seem to be a bit more of a dismal story right now. I mean, Morgan Stanley analysts are saying that there's a lot of noise and profitability specifically here for Walmart, and they expect the underwhelming earnings won't be a long-term risk to the stock. So that is something, of course, to note. We see shares that are up about 8% year to date here. But I do also want to take a look at Coty. And of course, this is the owner of a lot of the brands that we know, from Gucci to CoverGirl to Adidas, Calvin Klein. Shares are down 22% at the close today. That is the worst daily performance that we've seen since COVID, March 2020 here. And this is after the company reported essentially forecasting steep sales declines. Their forecast was not clearly accepted well by the market here. They're talking about innovation fatigue, specifically with this cosmetics unit here. So lots to really parse as we look at the earnings here. But I mean, if you look on a broader scope, it's a pretty brutal year here for the company. Shares are down 45% year to date. But let's end things with Cracker Barrel. Of course, we know this is a company that's been
I'm really into
in
the story.
Focus.
Explain it to me, because I'm very confused.
So much chatter online, right? I mean, everyone's talking about this company right now.
Why?
So we saw a slide in shares today, and that's after the company decided to change its logo. So if you're familiar with the company, their logo has always featured a man sitting on one of those little, what do they call them, a barrel?
Yeah, it's a rocking chair.
Yeah, a little rocking chair moment.
Shoulder.
We're removing that now.
Elbow perched on. And that sent the stock down?
Yeah, so we're moving on. People are really attached to this logo.
I don't get it.
I'm not to be pedantic, but I mean, this has somehow become a political culture war issue, and I honestly do not understand it. So explain it to me.
Have you guys been to Cracker Barrel?
Yes.
Okay, so you're familiar when you walk in, the vibe, the energy.
I mean, look, if you want to reminisce about the antebellum South, it's a great place to go.
We have a bunch of them back in Virginia, so I'm definitely very familiar with the restaurant. But it seems as though people are not really happy about this shift that they're seeing here.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.